Welcome to TradeTheMBI.com. This is John. This reports for the 19th. Well, we've just supported against the ABM yellow here, and so, as I've said before, above that, still long, and below it, you can look for short. But in this case, we've not seen any activity from shorts whatsoever to justify any strength. This has been a bull case all along, and as long as they're able to turn things around, that's going to be the play. The brief DOC spread that was on there was within rising steel, weak and falling orange, and with those two combinations, you're not going to get a whole lot of anything to the downside. And what that does is it just allows a momentum build, and that's kind of what we saw the other day. Is it counter to logic in that? That's not the point. The point is you've got people positioned in one direction where they were starting to build towards this, and it turns around. And from a Nasdaq standpoint, yes, we've clearly seen the weakness, and it definitely has broken down a little bit more. But the S&P and the broader market has been there to lift it up, and we still have the gold rising from a shakeout standpoint. Though we are right at the precipice of moving to a negative, so that was probably enough to just stave that off for a little bit at least. And you finally now have magenta moving back above yellow and eclipsing that white. So that's enough to sustain things. Now, of course, you've got lots of activity with announcements and everything in the Fed. And of course, now you finally have some of the talk of rates and where they're going to go, and this dampening of expectations that the Fed is going to cut. And at the end of the day, we're moving back to where treasuries should have been from a yield standpoint. There was a lot of talk of the Bank of Japan and that doing things, but at the end of the day, this is the problem. And as long as oil continues to creep up in that, you're going to have inflation rates increasing. The Fed is going to be paralyzed to do anything against that. Can you imagine cutting rates into rising inflation? I think they tried that before when I was a kid, and didn't go so well. I think Jimmy Carter lost 49 states from doing that kind of setup. From a euro standpoint, of course, we talked about it. As oil rises, there's no justification to be in a euro. None. Plain and simple. It's pretty clear. Yeah, you can see from my glasses, I lost the screw, fell out, so I have to replace that one. So it's all a gimmick, right? From a gold standpoint, a little bit of fade, which is surprising given the fact that, again, commodities are going to have to turn around and go. But, when you get market moves, the cash all went into the equities with this hope and desire of a change. And when that isn't realized, then definitely commodities will go back up. From Bitcoin, everyone gets all upset at me when I talk about, positive extremes and that they do get filled. We filled now all the way back to the beginning of that little mini up run. And you've got a problem when you get upset that something trades counter to what you think it should, because at the end of the day, it really shouldn't care which direction it's going as long as you're following the readings for it, and it does what it does. And so in this particular case, it's a quick 10K off Bitcoin in that. But of course, everybody knows this is a highly volatile setup, and of course, with the halving coming in, that it's going to be an interesting one because it's going to cut in half how much miners get for what they produce, and that will have a significant impact. But of course, it's always been mirrored with significant rises in the actual value of it. So it's an interesting dichotomy to play off of. From an ETH standpoint, of course, it had moved beyond Bitcoin relatively, and so its return is relatively stronger than Bitcoin. So, a classic game, you push up, take profits, and rinse and repeat. Nothing shocking with that. We had come back and filled back slightly higher highs from a low standpoint, and that improvement was enough to build. And once we got above the 23%, boom, that was pretty clean, and that's why the colors match pretty clearly with it. And then we flipped to a soft sell, came to the 50% and supported cleanly off the 50%. Now we've got this critical junction right here of the magenta and MBI white fading off. So short activity pretty much ending there as we move with the turnaround of magenta back over yellow. Still below the red line, so we may see some visiting of that back and forth a little bit here intraday. And should we get a turnaround of MBI white leading and magenta fading back underneath the yellow, then you can look to wherever the key support is and say, okay, then it's likely to break. But until that point, no. And so what we saw was a steady buildup in the pre-market in the European session that continued right before the open, and then as soon as the open happened, literally was soft from there. And so it was just the pre-market open that took care of everything. And then here we are in post-market right now, live action, and you can see we've tested to see any supply from a downside, and not much there. So popping back up. This is the beautiful ranges. I think that volatility has been excellent. So again, I continue to expect that, and that's just part of the natural flow of things. I think that with some of these mixed readings, you're going to have a problem with people having to rotate into different sectors and that, given that inflation is going to heat up again, and that's going to cause a whole new rotation. So just be prepared for that in the coming weeks, because with oil doing what it's doing, there's just no way around that. So that's the long and the short of it for now. It's always exciting when these are unprecedented times. So couple that with an election year, and woof, we're in for a nice ride all the way through summer. As always, though, anything relevant, I will put it on the Skype chat. Have a good one. Trade well.